Good morning, everyone, and welcome to today's webinar hosted by Insurance Times and Insurance Data Lab. For those of you who don't know me, my name is Katie Scott and I am the editor at Insurance Times. I'll be steering us through the webinar today, which is very much focused on the insurer landscape and the definition of underwriting excellence following the publication of this month's Top 50 Insurers report, which was available at the end of last week on the Insurance Times website. Hopefully you guys have all had a chance to have a little look. So this is an annual report that's produced by Insurance Times that ranks the top 50 UK and Gibraltar regulated insurers and Lloyd's syndicates by gross written premium. So Insurance Data Lab, they provide the data for this project. So before we get stuck into the main panel discussion, I'd like to introduce Dan King, one of Insurance Data Lab's co-founders, who is going to talk us through some of the report's key findings. Welcome, Dan.
Thanks, Katie, and hello, everyone. As in recent years, as Katie said, we ranked the biggest UK and Gibraltar regulated general insurers and Lloyd's syndicates by GWP. Everyone wants to know who's number one, so let's start with that. In last year's report, Aviva leapfrogged AXA to claim first place, and unsurprisingly, given its acquisition of the Red Line Group this summer, it significantly strengthened its lead at the top with annual gross written premium of £12.7 billion. AXA remains in second place with GWP of just over 7 billion, with Allianz remaining in third with almost £4.5 billion. Although the top three remain the same as last year, the insurer in fourth has moved up 9 places to return to the top 5 following its purchase of NIG and FarmWeb. So that insurer is the former RSA business, now called Intact. And completing the top 5 is Admiral, which has jumped 2 places from 7th last year. The highest new entry in the top 50 is Sompo International, which has come straight in at number 24 with GWP of almost £1.25 billion, with Haven, Tesco Underwriting and Marker Study also all climbing into the top 50 this year.
Great, thank you so much for that roundup, Dan. And what would you say are the key findings on more of a market level?
Well, the top 50, they reported an aggregate combined operating ratio of 96.1%, marking a welcome return to underwriting profit after those same insurers fell to an underwriting loss the previous year. We also looked at insurers outside of the top 50 and found that they reported an even stronger underwriting result with a COR of 95.2%, with much of this outperformance compared to the larger companies likely to be driven by the more specialist nature of their businesses. And we looked at individual product lines too, and we saw that although profitability is improving, motor is still in loss-making territory across both personal and commercial lines. But property is firmly now in profit, particularly in commercial lines, with a really impressive combined operating ratio of 82.4%.
That's great. And for the third year running, obviously the top 50 insurers report has included your proprietary annual underwriting performance ratings. Can you just explain a bit more about what you actually looked at to really put those together?
Yeah, sure. So the ratings are based on underwriting profitability. So for each insurer, we look at the most recent year's combined operating ratio. We look at the improvement in that ratio over the last 12 months. And we look at the 3-year aggregate combined operating ratio. And for Lloyd's syndicates, we look at very similar stuff, but it's the underwriting result instead, just because of the way they report their results. So for UK insurers, HCC International topped the table with a rating of 84%, and they've jumped a whopping 15 percentage points from last year's score of 69%. Star International is the only insurer to have won a gold award in each of the last 3 years, so very well done to both those companies. Our other UK Gold Award winners are Convex, Markel International, Ageas, Arch, Ecclesiastical and Admiral. For Gibraltar regulated insurers, it was Argus Insurance Europe that came out on top with a score of 79%. Argus is joined on the list of Gold Award winners by Marshmallow, Red Sands Insurance Europe, AA Underwriting and Watford Insurance Company Europe. And then when it comes to the Lloyd's market, Aegis managed 1225 was the highest rated syndicate with a rating of 74%. Other top performing syndicates picking up a gold award are 2 Lancashire managed syndicates, 3010 and 2010. Last year's winning syndicate, Beasley Furlong's 2623, Asta Managed 198, IQUW's 218, and Markel's 3000, which is another syndicate that's won gold for the second year in a row. So congratulations to all of those top performers. Licenses are available to use our Gold Award endorsements on websites, in adverts, and so on. So if any of the winners are watching, just contact me for further details.
That's great. And how can today's attendees really find out more about how you guys rate insurers?
So the scores for all the insurers and Lloyd's syndicates, along with all the data used to calculate our ratings and more detailed insights on underwriting performance, solvency, claims, complaints, customer experience, and so on, they're all available on our market intelligence platform. But we can also pull together custom benchmarking reports for insurers to compare performance with particular peers. And if anyone watching would like one of those, we'll also include access to our platform free of charge for 3 months. So just send me an email at dan@insurancedataLab.com if anyone would like to know more or want to see a quick demo.
Brilliant. Thank you so much for that, Dan. That's a great overview and a great way to kickstart the conversation. So now I want to crack on with our main panel discussion. So we'd like this to be as interactive as possible. So please do feel free to submit any questions you have for our panelists using the Q&A function as we go through, and we'll try and answer as many as we can. So joining myself and Dan today, I'd like to welcome Lee Mooney, the UK Managing Director at Markel, as well as Catherine Masters, Director of Pricing and Data at Conveyor Insurance. So thank you both so much for joining us. Really appreciate it. To start off, just want to issue some congratulations. Markel obviously winning 2 of Insurance Data Lab's underwriting gold awards there, Lee. I know you're relatively new to the Markel fold, but I'm sure it makes you feel quite proud.
Yeah, absolutely. It's just continued recognition from the market and from everything that we've been doing over the past few decades. So it's a really strong statement and more to come.
No, that's great. And I just wanted to sort of start our main panel discussion by building on some of the scene setting that Dan's already laid out from the Top 50 Insurers report. So Lee, Catherine, how would you both sum up really today's underwriting environment in terms of the plates that insurers are spinning and the pressures that they might be feeling?
I'd say it's continuing challenges for insurers, but in some respects, it's just another day at the office because we're kind of used to having to spin a lot of plates and navigate through some at times very complex environments. And I think those of people on the call will be these things will be familiar, but we're still dealing with elevated claims inflation. There is still significant economic headwinds that insurers are managing through, as well as the kind of regulatory landscape that we all exist in as well. But I do think that gives an opportunity for successful insurers to really navigate through with agility, and I think that's the main kind of mark of success, is making sure you can just navigate and manage through what is just kind of BAU now, in terms of the number of things that we have to think about and manage as well.
Yeah, I'd echo all of that. And I think from my perspective, where I see challenges, I see significant opportunities. And I think that is how I'd underpin it. I think if you look at the landscape, whether it's geopolitical, whether it's regulatory, or whether it's just the market conditions in which we operate at the moment, there's opportunities everywhere. And it's for those markets that can remain consistent, can remain stable, but can ultimately invest in talent to make sure that we can turn those challenges and each of those plates into significant opportunities. And this, for me, is how our industry thrives. When we're in the thick of challenges and we're in the thick of change, is how can we as an industry bring our entrepreneurialism to it and provide innovations and sector solutions that will resonate through. So for me, I think it's going to be a very, very exciting few years ahead, and I embrace it.
No, definitely. Dan, was there anything you wanted to add on that?
No, just echoing that really. Yeah, there's certainly no shortage of challenges facing insurers right now. So much, as the guys have said, so much uncertainty, volatility, tightening regulatory scrutiny. It's interesting to see that insurers across both the UK and Gibraltar have been strengthening their solvency coverage, maintaining kind of cautious levels of reinsurance, and as I said just now, returning to underwriting profit after a few challenging years. And despite premiums leveling off now, with the fall in rates from earlier this year, along with continuing pricing pressures, particularly around claims inflation, I think it'll be difficult for insurers to sustain underwriting profits in certain product lines this year, but it'll be interesting to see how it all turns out.
Yeah, so I mean, I guess an interesting question then is how can this really be achieved? You know, how can insurers grow and improve their businesses sustainably against these different headwinds? And what does that success really look like if you had to put a pin in it? What makes that up really? Lee, do you want to kick this one off?
Yes, I think if you look at the component parts of who will thrive and who will be successful in this market, and I said it in the first statement, I think first and foremost, you've got to be consistent. You have to be consistent in all you apply and all you do. And that, for me, having underwriting consistency is a critical part of this. I think the absolute way in which you will navigate through this is to have a real strong focus on service. As insurers, at times in the market, if you look across the past probably 5-10 years, I think insurers, from a composite or specialist lines perspective, have kind of struggled with service. And how do you embrace technology? How do you make it? How do you make your customer journeys more nimble and more easily accessible so we can influence and speed up trading? And that's why you'll have seen an emergence in the reports over the past few years of MGAs coming into the market with a real buoyancy, which is fantastic because competition, for me, makes it a thriving environment and one where we can compete and make sure we put the best foot forward. But I think in terms of that profitability, so I completely agree, Dan, how sustainable are those levels of profit given the healthy rating environment in which we've come? They can't be sustained at that level, but it means that we just have to think about other sectors, think about other solutions, and make sure that we can embrace the opportunity ahead. So for me, yet again, I see the challenging environment that we're in as a big opportunity from that. Catherine, I don't know if you've got any more to add.
I think the insurers report tells a very strong story here as well in terms of those insurers who have scale and oftentimes diversity in their product suite versus the more specialist or the newer entrants into the market, which are smaller but have a real opportunity and focus on what they underwrite and how they underwrite it. So I kind of see a bit of a tale of two halves, and I think the top 50 insurers report is a good exemplar of that. I agree with your point around service and this becoming an even more important aspect to what both consumers expect, but also the type of efforts that insurers make that our regulators expect us to make as well. So I agree that there is an opportunity, but I think the way that the market responds to that will be well, whether it's in two halves or a little bit more, it'll be quite unique to each company.
Dan, is there anything you wanted to chip in?
No, I think those guys have covered that extremely well.
Very eloquently, definitely. And obviously technology was something, Lee, I think you picked up on there. And I think that's something that's really interesting when you look at the whole service proposition as well. Because obviously there's that interplay, isn't there, between artificial intelligence for internal efficiencies and that back office functionality versus artificial intelligence then being used perhaps more for front end underwriting, pricing, and those more technical skills. I mean, what are your opinions really in terms of that relationship between AI and underwriting and perhaps some of the pain points of trying to utilize AI for that?
Yeah, I think AI has various uses and multitude of uses. So first and foremost, it's here to stay. It's not a flash in the pan. This is absolutely technology that, as an industry, we are embracing and need to embrace further. There are negative connotations to the use of AI. Obviously, you've seen recent press articles where sometimes it means job losses because of the way that people are using it. So actually, how we interpret and how we navigate and how we utilize AI in a very evolving industry is critical. Now, it's making sure we use it very carefully and very selectively when it comes to underwriting, making sure that we understand how we're using it and why we're using it and the methodology of such, all the way through to what you said about the point of sale. It's how can we ingest unformatted data better, and how can we utilize AI to improve our customer journeys? Because ultimately, this goes back to the service metrics. How can we ease your ability to trade with us as a company, us as an industry? How can we make sure that it's seamless, less points of friction? And by embracing the technology in that way, then that's how we will succeed through that.
Catherine, is there anything you wanted to add on that? I know that you're sort of really well versed in AI.
I'd say completely agree with the removal of friction. And I think that's probably where most insurers find their focus at the minute. How do we drive efficiencies, be that either efficiencies internally in our company in order to give time back to those specialists, those underwriters who get on with underwriting rather than doing some of the manual processes that perhaps have slowed down that service aspect that Lee articulates, or efficiencies in terms of or removing friction from the customer journey. I'd probably add two more things to that, though. I'd say, how can AI and our data assets enhance the experience that our customers have? And that could be using it to find new attributes, new ways to understand the risk in order to provide, the most appropriate product, the best, most competitive price, etc. But also, I think there is now more of an opportunity for adding value back to the customer as a result of these things. So think about things like prevention. Things that insurers perhaps wouldn't be able to, at scale, help their customers with. AI is one of the things that can really, I think, distinguish the offering that an insurer can have towards the customers. But I also take on board Lee's caution there. Just because we could do something doesn't mean we should. And I think all of us will have examples in our day-to-day lives where whatever AI engine we're using has failed us. I don't know, ask how many R's are in strawberry in ChatGPT, and you'll find out that it's not foolproof. So there is that balance. I think there's a lot of opportunity there in the points that we've talked about, but also a little bit of caution as well, because our industry has existed for hundreds of years on the talents of underwriters who know exactly what they're doing. That's people-centric. AI is not going to replace that anytime soon, and we must strike that balance.
No, definitely. And so what is the direction of travel then in terms of using AI at insurers? How is it sort of developing? Because obviously there, as you were saying, Catherine, is there that temptation to sort of all new shiny tech, the temptation to run before you can walk? How can that really be done in a safe, I guess, and efficient way?
Yeah, so having a human in the loop, definitely. But I also think that it's already important, and this will just increase the explainability and the customer's understanding of how we might be using AI to come to a decision or come to an outcome for them. So I would say definitely there is still a human in the loop aspect to how insurers need to use AI with caution today. But I could see some of the more lower premium, lower valued risks that go through with less of that friction, as Lee was mentioning. I think those are the areas of probably greater opportunity for how AI can be used to generate value at scale. But as I said, I don't believe that we are at the position yet where some of those more complex, more considered judgment that underwriters need do so well, that I don't think we're, as an industry, ready for yet.
Yeah, I agree, completely agree. And I think if you look at different distribution segments that you can apply AI to, whether it be open market trading, where Catherine absolutely in full agreement that the complexity of the risk, therefore, is there a role in there? Not now, not here, but maybe in the future. But if you look at things like from an e-trade perspective, simple things like selecting the right trade occupation, that's quite a navigational field if you're not quite familiar with that, and whether that's from a direct to consumer model or whether that's in a broker space, etc. Just having the ability to select the right trade code to start that customer journey from the right viewpoint with the input of AI and how you can do that is a much more powerful way of doing it. And I completely agree. This is about using this collaboratively to assist and aid our teams to make sure we can empower those to be there to give advice to our brokers. If you get that question right, then the answer is that there are no boundaries to this. If it becomes a competing situation where you're bringing it in to replace, or you're bringing it in an uneducated way to look at one singular metric, which is efficiency and expense, then you're doomed to fail, in my view, because this should be, how can I get my underwriters to spend 80-90% of their time underwriting and providing advice and support to our customers? At the moment, if you look at some models in the market, that actual underwriting time is between 40 and 50%. So the huge 50% of administrative tasks that this can start to challenge in a complementary, collaborative way, as opposed to that friction that Catherine articulated.
No, definitely. And we've had a few questions come through from the audience already based sort of touching on AI. So I'm just going to put those to you now while we're talking about it. We've had a question come through about how much data are we willing to share with AI, given that most AI will be operated via a third-party vendor, because in a lot of instances, in-house development comes with heavier costs. I don't know if anyone has a view on that one that they want to share.
Yeah, just a couple of thoughts on that. So I appreciate the challenge because, you know, as insurers, our customers' data needs to be treated with the utmost respect and confidence that how we use that is both ethical and we maintain the privacy. And so by nature of the beast, where there are more and more third-party tools available, that is going to create a little bit of a conflict. However, it's not insurmountable. And I think the types of solutions that you see on the market today, if they are good solutions, they build in privacy by design. They build in the level of control that is required throughout that exchange of data. So I don't think it is an insurmountable constraint. However, it absolutely is something that insurers need to be thinking about because it's what our customers are thinking about, and we must make sure that we follow and respect all of those expectations along that way. But the truth of the matter is, it is only going to become more prevalent to utilize third-party tools. So this is something that insurers have to grapple with.
Yeah. No, I completely agree. It's like with any vendor relationship where you are outsourcing anything, whether it's from data through to technology, whatever it looks like. It depends. It's not one size fits all. You've got to have clear lines of engagement, clear partnership, and clear understanding about what the data is used for and how the data is captured in that regard. But if you look at the SME sector in totality, so from a pure consumer perspective, one of the biggest areas of concern within the SME market at the moment is theft of data and cyber in particular. And that is absolutely now at the top of people's buying habits about what they do that. And I think it's about 70% of SMEs, that is their number one concern: loss of data, theft of data, getting themselves back up from that point of view. So you just very much take that concept and bring that into everything that Catherine's just articulated around data and the use of and the sustainability of it, and you kind of create that landscape there is. I just don't think there is a one size fits all answer to that, Kate. I think it's just each insurer and each vendor on its own merits.
And Dan, I guess this is quite an interesting take for you as a data expert who could technically be labelled with that third party tag.
Yeah, so I suppose we're obviously a very different type of company, not being an insurer. But I mean, just generally from what Lee and Catherine were saying, obviously completely echo those thoughts. And kind of on a more general level, I guess smart adoption of AI obviously can have a massive impact, improving internal processes by I kind of think really more replacing the really monotonous, repetitive work that allows teams to focus on more valuable tasks. And there's obviously a lot of talk about how AI can bring down cost and replace people. And although it certainly can, really I think it's more about how AI can help people become more efficient, enabling them to upskill. They can take on more interesting and more valuable work, which can benefit both insurers and policyholders. And in turn, as Catherine alluded to, should really improve service levels. And if you get it right, underwriting profits too. And that's although we're not an insurer, that's kind of the process we're going through in terms of how we're using AI at Insurance Data Lab. We're very much keeping people in the loop to add far greater value to clients. So, for example, we're about to go live with a custom built tool that for us will be a real game changer. We'll be able to source significantly more data, have it all checked and live on our service in minutes rather than days. It allows our team to spend more time analyzing rather than compiling data, so we can produce much more actionable insights, which will benefit everyone.
Yeah, definitely. That's really interesting. And we've had a few more questions come through on the AI topic, so I'm just going to put a few more your way. One question's come in. Someone's asking whether you guys have any specific examples where AI adoption has worked particularly well and where it has perhaps failed or not worked as well.
I have a few. Lee probably has some as well. And I think probably one of the most common ones, this isn't specific to underwriting, but I think it crosses, it'll be familiar to a lot of people, is putting in company-wide access to things like Copilot. And just how game-changing that can be to drive a level of efficiency is is quite remarkable, and the speed of which those types of tools have become available to people just with their hands on the keyboard is quite something, and a very quick pace of adoption as well. More specific to underwriting and pricing, actually, is for many years, insurers have been using different types of machine learning, different types of high levels of data, especially in the personal lines world and the aggregator market as well. And certainly, I think there are many good examples here at Covéa as well, where utilizing those newest techniques in our risk selection and in our ability to trade is now actually just part of the furniture, part of the fabric of what it means to operate as an insurer in this market today. So lots of good real world examples for many years of having machine learning and AI models in production as well. I imagine, Lee, you've got similar thoughts.
Yeah, so if you look at it purely from a process perspective, so the utilization of AI in triaging quotations coming through the door and prioritizing what they look like and getting them in a formatted way that will then sit on an underwriter's desk so they can underwrite. So that's been a really positive step forward that we've embraced as a company. We've also got 365, ChatGPT, etc., all on every system that we've got across the business. And the one area I would say is it is a mechanism to get the data in front of you. It's a mechanism to get a report in front of you. It doesn't necessarily mean that you understand what's in front of you. So the risk and warning factor to that is it will produce the report. It will produce what you say. It doesn't necessarily mean that you've therefore got the knowledge then of that. So you still need to do the learning and you still need to embrace yourself in it. It's just a more efficient way of getting things in front of you. I've seen many areas, well, that's fine. I've done my report in record time. And actually, but do you truly understand what it's saying and what it's telling you? That's the critical part of this. It's an efficiency tool. It speeds it up. It's not a tool that will give you the knowledge. That still has to be ingrained within yourself.
That's a really good point, Lee. Sorry, just to pick up on that it's not enough to just put in technologies or just put in AI. Businesses have to focus on the upskilling, the adoption, the understanding, and the capability to be able to maximize and optimize the use of those tools for their business. Otherwise, you can get it wrong. So, and I think that's not something we always talk about, because it's usually more exciting, isn't it, to talk about what cool tools and technologies we've put in. But you're very right. We need to have a focus on adoption and skill set as well in order to take full advantage of those things.
We had quite a few more questions coming on AI, but I'm going to try and circle back to those a bit later, because I'm aware otherwise we'll just keep on. As fascinating as it is, there's lots of subjects I want to pick your brains on. So I just wanted to pick up, for example, Lee, you mentioned e-trading a little bit earlier, which is obviously a sort of technology-related string that many insurers are now adding to their service bow, so to speak. So I just wanted to sort of find out a bit more about that relationship between software houses and insurer extranets when it comes to the e-trading relationships. How would you really describe the relationship between these two different types of e-trading platforms, and perhaps that subsequent impact on brokers?
Yeah, I think if you look at the evolution of e-trading for the past 10, 15 years, it's been slow burn. And to your point, Catherine, before about AI, actually methodically taking its time and embracing it and immersing it in your business is very much the e-trade story, if you look at where that's from. If you look at the strategies that all the market are looking at the moment, and everybody's looking at the extranet versus software house, etc. For me, this is one of optionality. This is one of how do you provide solutions and options for your brokers. You can't navigate past the fact that the majority of the market, 80+%, are on software houses that either plug into their back office. And the reason for that is it's more efficient because it talks to their system. So creating a strategy that goes against the tide is almost counterintuitive, but you need optionality there for those that aren't on said software houses. So you have to invest in various areas, but to different degrees, and make sure you have the optionality and choice. For me, an e-trade strategy should be one where the broker has the choice to use it or not. And they use the software house or use the extranet or they use the open market where that advice is there. If you go into a market where it is very rigid and you can only trade with us here on that product in this way, you're removing that optionality, that entrepreneurialism that's in the market, and you're creating more of a binary process, which for me is not what this industry is about. This is about how we can support each other with that human element, with that partnership, and with that advisory space as well. So probably use the terminology again, Katie, but I don't think it's one size fits all. I think optionality for me, making sure that we innovate and making sure we partner on various platforms, but making sure first and foremost we understand absolutely what our brokers want and need. And by taking it back from that point to where we are, then that's where you'll end up with the best solution in the market.
Definitely. Catherine, is there anything you wanted to add on that?
No, I think Lee's put it very well, and I agree with the point around optionality. That flexibility to brokers, I think, is key. So, and that will continue to evolve, I'm sure, with the types of tools and things coming onto the market.
Do you think that optionality has to really be developed, perhaps now that e-trading is gaining more traction, becoming more popular, or do you think there's still a particular dominance or leaning towards one route or another? Is optionality something you guys want to see more of, or is that something that you think is already in place?
I think there's always room to grow, and I think we'll know some of the kind of main routes that brokers use, but certainly a further option can only benefit the end customer.
Yeah. I think it depends as well on the spectrum. So whether it's micro SME, whether it's SME, whether it's more complex in that regard as well, there are different nuances within that SME segment. And obviously, we've still not cracked as a market the actual acceptance criteria for e-trade. So you've got fall-off ratios at about £2,500 premium. So therefore, the more complex risks, your 5 to 10,000, your 10 to 15, there's still not really that optionality in the market and those solutions that really can capture that. And that's where we need to start to look at solutions about how do we bring that more to the fold. But yeah, I see it as a critical point and something that we just need to continue to listen to our brokers about what they need.
And are there any particular challenges or opportunities around e-trading that can really be used to enhance an underwriting proposition?
I think the way I would look at e-trade, and I think the enhancement of it and the evolution of it is not e-trading a product, it's e-trading a proposition and a solution to a sector or to a challenge. And that's why at Markel, because we're a specialist insurer, taking specialist solutions and sector solutions to market via the e-trade route gives you that more all-encompassing journey from that perspective. So I can see that as a definite evolution and investment there.
Can I add one thing, which is I think with the continuing growth of e-trade, there is also an opportunity for that level of consistency in data, that level of consistency, therefore, to underpin the point that Lee made around proposition. And actually, that's an exciting opportunity, I think, to try and enhance the insurers' understanding of the risk, as well as insurers' ability to provide the right product and proposition for the customer. That's probably the next big evolution that I see in the growth of e-trade business.
Some really fascinating insights, guys. And in terms of tapping into technology as a differentiator, obviously very competitive UKGI market at the moment. What technologies would you guys really pinpoint as helping to underpin a successful underwriter, and how are these being implemented, in your opinions?
Well, I'm a little bit biased because I'm the pricing and data director, so that. But in terms of technologies to underpin things like risk selection and understanding of customer as well, gone are the days where it used to take, certainly in the personal lines space, days to weeks to understand and get a constant feedback loop on how your business is performing. So the emergence over the last 10 years of more modern and sophisticated data and AI platforms, it's kind of commonplace now to hold large amounts of data, and for analytical teams to interact with that, very, very quickly, in order to make changes in the market. So I would definitely call out not just the availability of data in the market, but the tools that we have, most insurers have, to be able to maintain and speed up that feedback loop in a lot of areas. And then the second point I would say is the ability to deliver to market a very personalized price, personalized proposition, and something that's really going to meet the requirements of the broker and the customer as well. So point of quote, point of sale solutions that can take in a lot of information very, very quickly, to analyze it, and then quickly produce something that is relevant, that is appropriate, and that also gives a competitive advantage for people who are investing in such things. That I think is the over the last, I'd say 10 years, that's where we've seen the biggest evolution in certainly in the personal lines market.
Yeah, and I'd echo that from a commercial lines perspective as well. So for me, the critical application of data is in pricing. So how can you immerse yourself in richer, more broader data pools to enhance your pricing? Because if you look at the market at the moment and you look at how people have historically priced, they've priced upon their experience as a company in the market as opposed to the sector itself in totality because of all the data that's available. So if I see 10 quotes through the door and I pick up 2, my pricing mechanism and engine going forward will be based upon those 2 quotes that I've actually seen and historically written, as opposed to actually we should be able to price on all of the market data we get, and the application of data that can ingest that. It might not materialize in terms of being a piece of new business or a renewal, but ingest the criteria and the pricing points of that particular customer and broaden your pricing pool. You end up pricing therefore on bigger populations as opposed to it just being what you've historically had. That for me is the real game-changing evolution of the use of data, and to just inform your pricing better. And that means we need better capabilities, we need different capabilities moving forward as we start to move more with a data spin on it. And that's where which we'll talk to at some point, about the injection of talent into the industry that's required.
Literally read my mind there, Lee. I was just about to mention talent and that evolving skill set. Obviously, the talent has been a huge talking point, I think, across the industry, and hopefully lots of attendees listening today are going to be joining me next week when Insurance Times launches our destination insurance talent charter with a webinar next Tuesday. So hopefully you guys will join me for that as well. But obviously, even Catherine, you mentioned as well about that experienced underwriting talent, knowing their stuff, having that expertise. So what are really perhaps some of the main challenges you guys are seeing when it comes to underwriting workforce and the talent challenges in the insurer market?
Yeah, there's 2 cohorts. We have people who are in the industry today who have great experience, who can really apply their talents and their skills to for the right underwriting outcomes. But we also have the next generation of underwriting talent available to us, and there's a real change of expectations, I think, both from a generation perspective, but also just the lived experiences that people coming into the industry have, and what they expect as well. And I'd say actually more broadly in UKGI, I'd like to see the perception of what it means to have a career in insurance continue to evolve, because I still think there is a perception that doesn't reflect certainly my experience here in the insurance industry, which is one of great innovation, one of great opportunity, and to take part in an industry that is in the fabric of our society as well. We need insurers and insurance products to be able to operate. So from the new generation coming in, I think we have to think very carefully about how we attract them, what things we do, how we invest in them to build those skills and capabilities, and how we make sure that we are giving them the opportunities to grow in their career. And there's a couple of examples that we found success with when we've been looking for the kind of next cohort of underwriting talent and insurance professionals as well. And it's things like having inclusive hiring practices to make sure we're increasing the diversity of entrants into the insurance industry, and being inclusive. So having things like neurodiversity initiatives that we've seen great success in increasing our hiring rate on, having a better support for people to remain in work so that we have a high proportion of female leaders as well going through to more senior roles too. So there's so much going on, but I think it's critical, especially for for underwriting professionals, because that they are a fundamental skill set, and we mustn't lose sight of that.
Definitely. Lee, do you have something you want to add to that?
No, completely agree with everything that Catherine's just said there, and I think for me, the critical point for me is just making sure we have a diverse way of bringing talent into the industry. So attracting them, whether it's from college, whether it's from university, whether it's from different countries, whether it's different backgrounds, just making sure you can bring the best to your business, and make sure when they come through the door that you do not stifle them into a particular way of doing things. Let them be themselves. They're there for a reason because of their characteristics, the culture, their values. Let them really embrace who they are and empower them to do so. And for me, and I came straight from college into the filing room in my previous employer, and 25 years later, I'm running one of the biggest insurers in the country. And it's some of these journeys we just need to really resonate through that this is a fantastic industry. It's a fantastic market where some of my best friends, some of my family work in it. It's such a rich industry that at times we talk it down. So we are almost our worst victims. We talk, oh, it's insurance, it's boring, isn't it? I think it's fantastic. I love it. And that might be quite sad on that spectrum, but by not talking it up and talking about the great lives, the great journeys we've all had and the great careers we've all had, I think we lose that fabric and we lose that richness. But for me, it all goes back to making sure that we can attract diverse people to come through the door, to make sure when they do come through the door, we empower them to be the best selves. And if you get that right, that's magic.
Yeah, and I think also there's been this perception, like Lee said, about the insurance being boring and trying to get people in at graduate level. And for years people have talked about, let's rebrand insurance. Let's talk about it being risk management. Let's talk about risk. Risk is much sexier than insurance, and that's what we're doing. We're in the business of risk and managing risk. And I think probably we could do a lot more to kind of play on that, because there's also so much going on in the world that's playing into risk, whether that's what's going on geopolitically, environmentally. We talked about technology. These are all things that have a huge bearing on, insurance can really help with a lot of these things, and it has a huge bearing on the market. So I think talking more about that and more about risk can really help. And the insurers have done some great work going back to diversity on D&I initiatives in recent years. But there's still a real lack of diversity at senior levels at most insurance groups. So I think a lot's been done in the last couple of years, but a lot more can and needs to be done to really show that, and to show the next generation that it doesn't matter what your background is, you can rise to the top of insurance companies.
Yeah, and it's great you pull that out, Dan, because I completely agree. But I think if you go into a world where you end up with metrics and measures, you're kind of failing because it's not embedded in your values. It's not embedded in who you are as a company. Having ratios and targets and that type of things, great from a premium and a P&L perspective. But when it comes to the fabric of your business, which is your people, it should just be ingrained in who you are, and that should be the culture and the values that resonate through. If you nail that, then you're on for a winner.
I think there are some simple things that insurers can do to help with that diversity, because it's one thing bringing people into an organization, but as you say, giving them the environment to be themselves and to bring the value that we want them to bring to the organization. And things like having flexible policies, things like having opportunities for specific talent cohorts and things like that, to make sure that there is equality. There's just, and none of it is kind of new. it's just get the basics right so that people can come to work and be their best selves. And there's lots of stats and things on this, but it's very clear that the companies who are diverse and provide the right opportunity for people are more successful in the long run.
Definitely, completely agree with you guys there. We've had loads of questions come through from the audience, which is great. So I'm just going to fire one more at you myself, and then I'll hand over to the questions we've got coming in from the audience so we can try and get through as many of them as possible. But just in a single sentence, what would you say underwriting excellence means to you if you had to sum it up in a sentence? Catherine, I'm going to pick on you first.
Thanks, Katie. So I would say agility to navigate the market where uncertainties are now just part of our lives.
Wow.
I mean, you've got to follow that now, Lee. That was a good answer.
Yeah, so for me, underwriting is all about consistency built on a bedrock of fundamental service execution.
Also good answer, strong answer. Dan?
Yeah, I suppose just to say something a bit different, because what Lee and Catherine said is spot on, obviously. But I suppose for me, it's about having smart people using smart technology and access to really, really good data.
Great, and thank you so much, guys. We've had some questions come through sort of on the talent topic we were just discussing, so I'm going to sort of fire those at you first. One question regards concerns of insurers trying to poach promising talent that has about 2 or 3 years experience from each other. Is that a sort of situation that you're seeing? Is that a valid concern that you feel is happening in the insurer market?
I think if you look at it as a market, so there are definite movements around, but for me, that's healthy. That keeps it fluid, that keeps it buoyant, that keeps it an interesting market. For me, I wouldn't be concerned about insurers poaching from outside in. I'd be more concerned about what is that employee's experience from within, i.e., why do they want to leave? They want to leave for particular reasons because they don't want to leave something that is absolutely driven by their values, the culture, and they're getting the best reward and recognition that they need. So you have to look at the employee experience from within. Almost the external element to it, you cannot predict or you cannot navigate or you cannot change the tide on that. That will happen, and that is good, because if people want your people, that's because you are doing something good. That's because you are investing in talent, you're investing in capability, and you have something that the market wants. For me, that's really healthy, and that's a real testament of you as an employer and you as a business. But I would start very much with that question. I would start very much is, what is our employee proposition? What is our employee journey? And how are we making the best of what they do on a day-to-day basis?
Catherine, Dan, anyone got anything else they'd like to add to that?
I think it's a great advertisement for the type of career you can have in the insurance industry. The skill set we have is highly regarded, and it's very competitive. That I think is a really great example of why the next generation of insurance professionals and underwriters should be considering a career in our industry.
No, very true. And interestingly, another question that's come through raises a really great point about the education, I guess, of new talent joining the market and new entrants getting their foot in the door at an insurance firm, with AI perhaps taking away those admin tasks that new starters initially would have been tasked with as part of that learning curve. I mean, how do you see that in terms of that interplay of AI and those new starters in the industry?
Do you know, it's funny. I was using an analogy the other day. I was equating, and I don't know whether this is fair, that, if you think about the Industrial Revolution, there's things that our great-grandparents would know how to do that we don't know how to do. But does it impact our daily lives? Well, no, because technology has kind of moved on. So there's things that we just will never need to know how to do. I think the same could be said for the AI revolution, and it's something that I'm not sure I've got a definitive opinion on it yet, because I'm thinking to myself, well, actually, no, this is a really important skill. I should know how to summarize a document or crunch some numbers somewhere. This is how I learned, but things have moved on. So actually, I don't think we should be too scared, but we're just in the eye of the storm of that change. But my suspicion is that in 20, 30 years time, it will reflect on it and think, well, actually, no, don't need to know how to do that anymore, because something else does it for me.
No, definitely. Lee, Dan, does either of you want to weigh in on this?
My only concern about all this is to make sure that there is a pathway for graduates to come in at, relatively junior levels, and particularly in this post-COVID world where so many people are working from home more than they ever used to. There needs to be, a program in place for graduates to come in and learn about insurance from people that have been there and done it, as well as using AI to help. So I think there's just that combination that needs to be in place. And I don't know how it works currently. Obviously, Lee and Catherine, maybe you can tell us how it works at your insurance groups for graduates these days. But I'm guessing it will become in the near future a very different type of graduate program than it used to be. But I'm no expert here.
Yeah, it's evolving all the time from a graduate perspective and from apprentice perspective as well. The critical point in both of those programs is making sure you've got fluidity, making sure that they see all parts of the business so they can really navigate a career thereafter. But for me, whether it's a new recruit straight from college, straight from school, or whatever that may be, having real structured programs in place and making sure that they can see the career journey and the road ahead is critical. Otherwise, you just end up bringing employees through the door, and that's the last thing you want to do, bring employees through the door. You want to bring people that can really invest in the value and culture of your business, and that's by giving them that vision and that roadmap ahead. Then it's up to them whether they choose to be on that or not, or whether their skill set actually resonates with it. But so long as you've got that fluidity, and I am an absolute, to your point, Dan, around the real wrestle that the industry's had over the last 5 years plus on flexible ways of working and being more at home, actually learning from an underwriter, just being sat next to somebody and having that conversation. What do you think about this? What have you done? Have you seen this type of thing before? Or whether that's in pricing, whether that's in underwriting, whether that's risk management or sales, just having that collaboration really builds up the culture of your business. But how do you get that? By striking that very, very conscious, delicate balance between flexible ways of working and investing in the future capability of your business. Nobody's answered it yet completely across the market. There's no one size fits all, but I think it's something that we really need to start to really refine and think about. Actually, learning is about collaboration in my simplistic view, and it's about how you can learn from those, to your point, Catherine, that have been here for decades, that can impart their knowledge in the new recruits coming through the door.
No, definitely. That's a great answer. Thank you. We've had a question come through about consistency and how, obviously, it's something you guys have all touched on, I think, at some point during the conversation today. But how does this drive for consistency sit alongside the need to maintain pricing discipline in a soft market across some product lines?
I think to be consistent, you need to make sure that the ambitions of your business is not based upon one optic, and that optic being market share. If you're chasing market share and that's what you are driven toward, you're going to make decisions which basically are not sustainable and not consistent, because you will therefore be chasing the market. Your price should be the price for that customer, the price for that risk, the price for that exposure, and the price for that proposition in which the customer wants to pay. You should almost not listen to the market conditions from that perspective, because it's about how do you provide that consistency. And I think that's about the values of your business. If your business is driven upon one of scale, because scale is king and therefore we must be the greatest and we must have the biggest market share, then you're destined to fail, in my view, because you need to make sure that you can navigate your market share by providing consistency to all that you do. And if you nail that, then that's where you should be.
And let's face it, the insurance cycles are getting shorter as well. So it creates an environment where if you don't do the things that Leah's just described, then the highs and lows will be really volatile every year, and then that's not consistent either. So I think it's very well put around focusing on your values, focus on your ability to navigate through those uncertainties and all those plates that are spinning, and staying true to that.
No, definitely. And there's another one that's come through about sustainability and ESG data that's being used in underwriting, particularly on the commercial line side. Lee, probably one for you in terms of the sustainability related data that's used in underwriting, if there's some clarity you can give there for our audience.
Yeah, it's pretty much used across the piece. So we are obviously heavily investing in ESG and the way that walks forward, but we're using it in different ways. I probably couldn't give ultimate clarity, but maybe able to come back to you on that one. But yeah, I probably need to come back to you on that one.
No, that's fine. Thank you. And just to touch again on the technology AI topic, one question we've had, which is quite interesting to, I think, to get your perspectives on, is whether brokers are keeping up with insurers when it comes to investing in and adopting technologies and new technologies. This particular person, Martin, has said that he's seen reports of insurers being frustrated by the lag in broker investment in technology. Is that something that you guys have perhaps seen or heard about as well, or do you think that's unfounded?
It's a bit variable, I'd say, because the size of brokers that we work with is also variable. So I think one thing that insurers can do is, if we have things that we've developed, or we can support our brokers by removing some of that friction. This isn't the case for everybody, but some of our brokers wouldn't necessarily have the scale to be able to make the same investments as we can. So actually, I think I see that as an opportunity for insurers to work in collaboration and partnership with our broker partners to help provide solutions to that, and to work collaboratively, because ultimately, we're trying to get the best proposition, best outcome for the customer in the end. So there's definitely a partnership, I would say, for insurers and brokers to have that.
Yeah, no, I completely agree. It's that for me spins back to the previous point I made about optionality. As an industry, if we can provide different solutions that cater for the needs and the models of brokers out there, whether it's a micro SME broker all the way up through to a consolidated through a global model, they've all got different cost bases, different ways of trading, different ways of how they need to or can access you from an affordability perspective. So if we provide them with different solutions for that, then we can cater to all. But definitely not a friction point or a frustration on our part. I don't think anybody has cracked technology across the market. So let's be crystal clear. There's can't be any finger pointing from that point of view, because we'll end up in a very vicious circle. But no frustrations, no. It's more how do we collaborate better?
That makes sense. And I'm just going to try and squeeze one more question in. So someone's asked about AI use cases around particularly complex decision making in organizations, and perhaps asking what the most common reasons are for a use case not going ahead or not getting the go ahead, and whether that's linked to perhaps poor data or relevancy. And I guess on the flip side, then, how do use cases get across the line and into production?
For me, it's explainability. We must be able to clearly articulate how we've come to a decision, whether that's a human making a decision, or whether that's an AI tool product making a decision. And there are lots of ways to do that, but I would say this is one of the biggest constraints for more use cases to be accepted. But I don't think that's a bad thing, to be clear. And we must continue to strive to have maximum explainability in when we use these tools. Otherwise, we will break the trust of our partners and our customers, and that is not something as an insurer we'd want to do. So for me, the successful use cases are the ones that they might have all the technical brilliance in the world, but they are also super explainable and easy to understand by somebody who isn't an AI specialist.
Yeah, completely agree. For me, explainability, security, and trust hit the nail on the head.
Oh, perfect. Thank you so much, guys. I'm afraid we've now reached the end of our time together this morning. That's gone so quickly. It's been a really interesting, great discussion, really enlightening to dig into insurer underwriting performance. So thank you so much to Dan, Catherine and Lee for taking the time out of your busy schedules to join me today. I really appreciate it. You've been fabulous panelists, so thank you so much. A recording of the webinar will be available for anyone that wants to listen back to it or share it with your colleagues. It'll be on the next Insurance Data Lab newsletter, so do keep an eye out for that. Equally, if you've enjoyed Insurance Times' Top 50 Insurers report, we have our Top 50 Brokers supplement, which comes out in December, so do watch out for that one as well. But thank you so much for joining us today, everyone, both at home and panelists. Really appreciate it, and hopefully see you in the next webinar.
Bye. Thank you.
Thank you
Very much.
Thanks.